candidates must understand the major types of assurance services performed by the internal audit function. Assurance services involve independent and objective assessments designed to provide confidence regarding the effectiveness of governance, risk management, and control processes. The program specifically emphasizes risk and control assessments, third-party and contract compliance audits, IT security and privacy audits, performance and quality audits, operational and financial audits, regulatory compliance audits, audits of organizational culture, and audits of management reporting processes. Understanding these assurance engagements helps candidates recognize how internal auditors evaluate risks and controls while supporting organizational objectives through independent assurance and professional recommendations. 1. Overview of assurance services. Assurance services are structured engagements in which internal auditors independently evaluate organizational activities and communicate conclusions to stakeholders. Their purpose is to provide confidence that governance, risk management, and control processes are functioning effectively. Internal auditors gather evidence, perform testing procedures, assess risks, and compare actual practices against established criteria such as policies, regulations, standards, and best practices. Assurance engagements support board oversight responsibilities and help management identify opportunities for improvement. Unlike advisory services, assurance engagements require auditors to maintain a high degree of independence and objectivity. The resulting reports provide stakeholders with reliable information regarding organizational performance, control effectiveness, and risk exposure. Consequently, assurance services are a fundamental mechanism through which internal auditing creates organizational value and accountability. 2. Risk and control assessments. Risk and control assessments are among the most common assurance services performed by internal auditors. These engagements evaluate whether significant organizational risks have been properly identified, assessed, managed, and monitored. Auditors examine the design and operating effectiveness of internal controls that mitigate identified risks. The objective is to determine whether controls are sufficient to reduce risks to acceptable levels consistent with organizational risk appetite and risk tolerance. Risk and control assessments may cover strategic, operational, financial, technological, or compliance-related risks. Internal auditors identify control weaknesses, gaps, redundancies, and inefficiencies while recommending improvements. These assessments provide assurance that management's risk management activities are functioning effectively and contribute to organizational resilience, stability, and achievement of strategic objectives. 3. Third-party and contract compliance audits. Organizations increasingly rely on vendors, contractors, service providers, and outsourcing arrangements to support operations. Third-party and contract compliance audits evaluate whether external parties are fulfilling contractual obligations and complying with applicable requirements. Internal auditors review contract terms, service level agreements, performance metrics, security requirements, regulatory obligations, and financial arrangements. The objective is to determine whether third parties are delivering agreed-upon services while protecting organizational interests. These audits help identify risks related to vendor performance, fraud, data protection, operational disruptions, and legal liabilities. By independently assessing third-party relationships, internal auditors provide assurance that outsourced activities remain aligned with organizational expectations and that management is effectively overseeing external service providers and contractual commitments. 4. IT security and privacy audits. Information technology environments create significant operational and strategic risks, making IT security and privacy audits a critical assurance service. These audits evaluate the effectiveness of controls designed to protect information assets, systems, networks, and sensitive data. Internal auditors assess cybersecurity frameworks, access controls, authentication procedures, incident response processes, disaster recovery capabilities, and data protection measures. Privacy audits focus on compliance with privacy laws, regulations, and organizational policies governing personal information. Auditors examine whether confidential information is collected, stored, processed, and shared appropriately. The objective is to provide assurance that technological risks are adequately managed and that information assets remain secure. Effective IT and privacy audits support business continuity, regulatory compliance, stakeholder trust, and organizational reputation. 5. Performance and quality audits. Performance and quality audits assess whether organizational activities achieve intended objectives efficiently, effectively, and economically. Rather than focusing solely on compliance, these audits evaluate outcomes, productivity, resource utilization, and service quality. Internal auditors examine performance indicators, operational results, quality management systems, customer satisfaction measures, and process efficiency. The goal is to determine whether resources are being used optimally and whether organizational activities deliver expected value. Quality audits may evaluate adherence to established quality standards, continuous improvement programs, and quality assurance frameworks. Findings often identify opportunities to streamline operations, reduce waste, improve productivity, and enhance service delivery. These engagements help organizations strengthen competitiveness and achieve superior operational performance through objective evaluation and improvement recommendations. 6. Operational, financial, and regulatory compliance audits. Operational audits assess the effectiveness and efficiency of business processes, while financial audits evaluate financial controls, reporting accuracy, and safeguarding of assets. Regulatory compliance audits determine whether organizational activities conform to applicable laws, regulations, policies, and industry requirements. Internal auditors review processes, transactions, records, and controls to identify weaknesses that could result in operational inefficiencies, financial misstatements, or compliance violations. These engagements help management ensure accountability and mitigate legal, financial, and reputational risks. Operational audits focus on process improvement. Financial audits emphasize reliability and integrity of financial information, and compliance audits concentrate on adherence to requirements. Together, these assurance services provide comprehensive evaluations that support organizational governance and risk management objectives. 7. Audits of organizational culture. Modern internal auditing increasingly recognizes organizational culture as a significant driver of risk and performance. Culture audits assess whether employee behaviors, values, attitudes, and decision-making practices align with the organization's mission, ethical standards, and governance expectations. Internal auditors evaluate indicators such as leadership behavior, accountability structures, employee engagement, communication practices, whistleblower mechanisms, and ethical conduct. The objective is to identify cultural strengths and weaknesses that may influence risk management, compliance, fraud prevention, and overall organizational performance. Since culture affects how employees respond to controls and policies, a strong ethical culture contributes significantly to effective governance. These audits provide valuable insights into whether the organization's culture supports long-term success and responsible business conduct. 8. Audits of the management reporting process and exam model. Audits of the management reporting process evaluate the accuracy, completeness, reliability, and timeliness of information provided to decision makers. Internal auditors assess reporting systems, data quality controls, performance reporting methodologies, and management information processes. Reliable reporting is essential because strategic and operational decisions depend on accurate information. Weak reporting processes can result in poor decisions, increased risks, and ineffective oversight. For examination purposes, candidates should remember the Ripper model for assurance services. Risk and control assessments, third-party audits, privacy and IT security audits, performance and quality audits, operational audits, compliance audits, reporting process audits, and culture audits. This model summarizes the principal assurance services through which internal auditors independently evaluate organizational activities and provide confidence to stakeholders.